We want to bring in Bank of America Merrill Lynch head of metal research, Michael Widmer, who sees gold rising towards $2,000 an ounce in the next 2 years. He joins us now from London. Michael, great to speak with you. You heard from our previous guest who was telling Abigail that perhaps gold has moved up too far too fast for now, and it could get to $1,400. That $2,000 price target you have for gold, talk to us about how it gets there. How choppy of a ride will it be to get to $2,000 over the next 2 years?
Look, there's, I think, two stages to get higher from here. I think our base case for the second quarter next year is $1,500 per ounce, and that's just very simply a trade on more accommodation from central banks around the world. We've been bullish gold since late 2018 on a view. At the time, I think if you remember, the Fed tried to be hawkish, didn't really work out. I think markets became very volatile. We had this dovish tilt, and I think that was our base case expectation. I think where you are right now, we have had a cut, and I think we believe that there's further cuts coming through. That's just the Fed. You have got talks about more monetary easing in other parts of the world as well, and I think that really drowns out everything else on the dollar, for instance, when it comes to gold prices at the moment. So 1,500 on being bearish. Now, the other issue, though, that we have, and this is the second stage, is that we're talking increasingly about quantitative failure, and that is basically a concept where kind of central banks try to reflate the economies, and it hasn't really worked, but they're adamant that the more stimulus they provide, the more inflation, the more likely it is that inflation will ultimately come through. Now, the problem that you have is if the markets become much less enthusiastic and don't believe necessarily in that stimulus, you may see a kind of resumption of that increase in volatility. And I think if that happens, growth concerns still abound, then I think actually you can see gold prices spiking from what our base case is.
Michael, interestingly, we've seen central bank action affecting the price of gold, but also central bank purchasing as well, right? How much of a player are they in driving demand for gold as it stands?
They are very important. I think when you're looking back at 2009, that was a year when central banks turned net buyers from having been net sellers. There is a very strong correlation indeed between central bank purchases and higher gold prices. And I think when you're looking at it right now, there is certainly a strong incentive, particularly for emerging market central banks, still to add gold to the reserves. There's a few surveys out recently that just suggest that. I think the majority of central banks still want to increase their gold holdings in the reserves. De-dollarization is one theme. I think the bond market, the concerns over where bonds are going is certainly another theme. The Russians have been the biggest de-dollarizer in the past few quarters. They have also been the biggest gold buyers. We see gold buying also coming through from China, for instance. So you do see that there is a little bit of a geopolitical thing going on as well.
Yeah, I hear what you're saying, but when you look at gold prices, something changed in mid-June where until that point, gold had kind of been meandering, but then it really took off. I mean, before June, it was still trading at less than $1,300 an ounce. Talk a little bit more about the evidence that markets are less convinced that central banks can reflate the economy, the idea of quantitative failure really taking root.
I think when you're thinking back about how the year played out, there was certainly always this expectation that you do get some kind of a trade agreement between the US and China. And I think the lack of de-escalation is certainly causing a lot of apprehension about where growth is going ultimately. And I think as all of this was playing out and we saw that dovish tilt from the central banks, I think this is ultimately when gold started to take off.